Hello guys, welcome to this new lecture about unrealized revaluation and year-end gains and losses. So guys, unrealized revaluation is the process of updating the value of your foreign currencies balances, like bank accounts or payables or cash, to reflect the current market exchange rate at year-end. This gain or losses are called unrealized because no actual currency exchange has taken place. It is strictly an accounting adjustment to ensure balance sheet accuracy. In Odoo, this creates an automated entry that recognizes the difference in the income statement, reflecting the true financial position of the company. For example, guys, if we open the general ledger here, accounting, go to reporting and choose general ledger here. We will see here cash or bank or the account, the both here and here. If we open Emirates Dirham bank account and cash account of Dirham Emirates Dirham is equal to this amount in Algerian dinars. This amount in Emirates Dirham, it's equal for this amount in Algerian dinars, and this amount in Emirates Dirham in the bank is equal to this account in Algerian dinars in the date of the operation. But for example, guys, now the Emirates Dirham rate is increased to the double. For example, so that's mean this amount in Emirates Dirham will make the double of this here and here. So we have again here with the same amount of Emirates Dirham because the rate increased to the double, and we call it unrealized gains because we do it just for report data. So guys, if we go here to configuration and currencies, go to configurations, currencies, and open the Emirates Dirham currencies and add a new one here, add a line, and choose for example November the 13th here, and choose for example 300. After that, guys, go to create a new bill. To explain more, go here, vendor bills, a new one. Just a moment, it's loading. Okay, choose a vendor, and in the bill date, what we will choose? We have 30 November here. We have November the 13th here. So here we must choose a date before this date. For example, 16 November. Also here the same date. After that, guys, click on other line, other product or a description. For example, Ringo product or Ringo service, and choose here the account. For example, this account, choose and research, and in analytic it's optional, not mandatory, leave it, and add here 50 million Emirates Dirham, and choose the amount here like that, 50 million Emirates Dirham. And if we see, guys, here in journal items, you can see the equal amount in Algerian dinars, 4 billion and 500 million Algerian dinars, and click here confirm, guys. And now guys, if we go and click and confirm, so guys, that means we have a liability to pay it to the vendor. but we didn't pay it yet, because we have this option to pay. We didn't pay it yet. And if we see here in review and open the report, unrealized currency, here, go here, review, unrealized currencies, and choose the date of today. And choose the date of November 16, specific date, 16 November 26. Here guys, November the 16, and we can see here guys this operation of 50 million Emirates dirham here. And Odoo here guys is show to us the currently foreign currency balance here, 50 millions. Balance in foreign currency, 50 millions of the operation we will early create. And here guys is the equal amount in Algerian dinars to it in the same time of the operation date. And here guys the balance at current rate. It's mean the rate of today in Algerian dinars. It's mean the rate of today in Algerian dinars. And we see here the adjustment here is 0 dinars, because it's the same date. But guys, if we choose here to compare with previous specific date, for example the 1st of December, we have not any adjustment. But guys, if we change here the currency rate, for example, I'll go here, past, go to currency, open the Emirates dirham, and choose here the date of today, for example May the 15th, and click here and add a new rate, for example 200. And now if we go here to the bill and we set it to the draft and choose here May the 13th, for example May the 13th, here and here and here May the 13th also. Click here save and confirm. Change here the sequence like this. For example, Stefan, like this, confirm. And now if you go back here guys, you can see the adjustment here of 50 million. It's 1.5 million, because the operation date is May the 13th, and May the 13th the currency rate is 200 Algerian dinars for 1 Emirates dirham, and and here and here in November the 13th is 300. So here we can see the balance at operation rate is 3 billion Algerian dinars, and here in current rate, the rate of this date, November the 16th, is 4.5 billion Algerian dinars. So the adjustment is minus 1.5 billion Algerian dinars, because this amount minus this amount, we can find this amount, and there is the difference between the two. So guys, for example, if a customer, for example here, pay to us in the operation date, so guys, for example, if the vendor here, we pay to him in the operation date, he will receive this amount. We will pay this amount in the operation date, but if we pay it in this date, in the current date, we will pay it this amount. We can do the same thing for an invoice with a customer. For example, go to invoice, add a new invoice, add a new one, choose the date of today, and add a line, add a description or a product you want, then go to and choose an account, for example, this account, and choose a price, for example 60 million, email is dirham, date of today, and click here and confirm, and here add the analytic division here because it's mandatory. Click here, confirm, and if you go here to Unrealized losses and gains and click here, you can see here the 16 millions appear here in customers, email is dirham, and the amount in operation date May the 15 is 3 billion and 200 million, 3 billion and 200 million Algerian dinars, and the balance at the current rate of November the 16 is 4 billion and 800 million Algerian dinars. And here we have an gain, and here we have an loss. This for the bill, 1 billion and 500 million Algerian dinars loss, and here we have 1 billion and 600 million Algerian dinars gain, and that's unrealized gain and loss, don't forget. And that's mean guys, if the customer pay to us here in the operation date, we will receive 3 billion, and if he paid to us in this day, November the 16th, he will pay to us 4 billion and 800 because the currency rate changed and increased. So guys, don't forget, this is unrealized profit. This 1 billion and 600 until the customer pay to us the amount in November this. So guys, the system registered this amount in Algerian dinars in place of this amount. That's why we call it unrealized gains and losses. And he registered this amount in the place of this amount, and that's wrong. The system must register this amount and this amount, 1 billion and 5 and 4 billion, because the rate of the Persian currency changed and increased, and we must update it to send it the updated report to the administration of the company, and we leave it without update, or we update it in the system. So guys, now if you want to apply the adjustment and register this amount in the place of this amount, just click here in adjustment entry and choose the account is for foreign exchange gains and losses. Here, income in expense, choose this account, and in the income choose this account. You can see here the accounts to adjustment, this account and this account and this account, and we added this to account to move the adjustment amounts to the income and expense accounts. Here add the unrealized currency loss here and the unrealized currency gain here. Choose the journal also here, for example miscellaneous operations, and click here in create entry, and we can see here the amount is credited go from the inventory and the service provider to the loss on foreign currency. And here from clients to the gain to the foreign exchange gains. And guys, nothing changed in the report of the end of the year, because like what we say, this is unrealized gain and unrealized loss. So they closed each other. They don't have any effect, but we can see it if we go back to the profit and loss report and the balance sheet. And now guys, the adjustment update in the first of the year. If you click in reverse entry, choose reverse date, first day of January 2027, and click in reverse. Now guys, if we go to our profit and losses and choose year 26, compare with custom date January 01/01/2027 to January, we can see here guys the balance updated, the financial income increase with this amount, the gain increase, and the loss increase in this options, in this entries. So guys, that's become realized gain and loss, not unrealized gain and loss. Thank you for watching guys. See you in the next lecture. Your brother Gouesmi Amos. See ya guys.